Wall Street opens at yet another historic high this morning after its 51st record close of 2013. The Dow Jones Industrial Average is on track to finish 26% higher than a year ago. And here to look at what's next is John Dobosz. John, good morning.
Good morning.
Incredible year, obviously, for the stock market. You almost couldn't lose if you had money in stocks.
This is true.
What about this coming year?
Well, bear markets like to climb what people call a wall of worry. And there's a lot of expressions on Wall Street. That's one of them. There's been plenty to worry about. Unemployment has been still pretty high, but it's coming down. Interest rates, though, are one thing to keep an eye on. If you own bonds, you certainly have felt pain. As interest rates go up, the value of bonds go down. Mm-hmm. But Ben Bernanke and the Fed have been pushing people into the stock market, and
so where should you put your money in 2014? Specifically,
the technology sector, the energy sector, and some financial sector stocks look pretty good right now. You hear a lot about Facebook and Twitter. Twitter is up about 100% just since early November, but the company has no profits. Facebook is a very expensive stock, and it could be as cool as last week's party. People, what's the staying power of it? So I'd avoid companies like that. They go up, but go for old school technology companies like Microsoft. Microsoft is getting a new CEO. The dividend is about 3%. Apple, it's going on 3 years now that Steve Jobs has passed, and they haven't had a great, wow product, but they just got into China with the iPhone, and the stock is also paying a great dividend. They increased it every year in the last 3 years.
What about people who say, though, the old adage, buy low, sell high? The market seems really high right now. Maybe I don't want to invest and put money in. Is it, you think it's still going to go up? It's still worth it to put money in?
Keep in mind, you can also buy high and sell higher. And momentum works, whether it's with automobiles or with the stock market. Things that are in motion tend to stay in motion. I mentioned interest rates. That's one thing to look at. Oil has been really not that expensive. It's been coming back lately. We produce a lot of energy here in the U.S., fracking. So all the oil that's easy to get out of the earth has already been taken out.
So what stocks would you look at that can capitalize on this?
Okay, High Crush Partners, HCLP. That's a company that operates a sand pit in Wisconsin that makes this white sand that's used in fracking. Great dividend yield there. And then Pipeline Company, Energy Transfer Partners, great dividend yield also, 6.5%. They move natural gas all around the country. They just acquired Sunoco Logistics Partners. Big play there. That's Energy Transfer Partners. And then the drillers, Transocean, that's an offshore deep water driller. They have these rigs. They were obviously involved in the Deepwater Horizon disaster, but that's a few years ago, and that's all behind them. And a company out of Britain called Ensco also drills for oil.
And why do you think all of these will be doing well in 2014?
I can't predict, stock market forecasters make weather forecasters look great.
Yeah.
And weather forecasters are pretty good, actually. But I think they'll do well in the long run. I can't tell you they're going to pop next year, but they're trading more cheaply than they have in the last 5 years as a measure of price to earnings and price to sales and price to assets. So they're cheap stocks that have paid reliable dividends over a long period of time. And you won't get burned in them the way you could in a high-flying tech stock.
Thanks, John. Good to see you.
Thank you.